Hey, what's up? This is Trader Tim from EminiMind, and we're doing another market analysis video here. It's the 11th of October, and let's jump right in here to the ES. So, the first thing I wanted to talk about today is looking at the daily chart. Last week was Thursday. We came right to that 50%, that halfway back. And so, anytime that we break a low like this, but don't make it to the negative 23, I still leave that original drawing up. And same with if we are just between failing the 61.8, which we haven't done yet, or completing to the negative 23% target, which we have not done yet. If neither of those two have occurred, you want to leave that original drawing up. Now, you can come in and look at where the next retracement would be. And if you look at today, that 44.0775, I say next retracement, it would just be essentially the full halfway back by adjusting the anchor point. But I find that, if you do that, if you bring that down like this, now your failure point, your 61.8, drops by 10 points. So I want this 44.50 up here to remain my 61.8 failure line in the sand. And even from that point, I'm using, above this candle's high here. So really it's like a 44.55. And I'd like to see a close above that to be a true break of this downtrend. Now, let's see, before we get to a couple of entries on these daily levels, let's go to today, and I want to talk about the trade. Going to this morning. So if we look at the open, we traded up from the open, and this first 30 minutes was pretty much a ripping straight up every single candle. And then when we got to that 30-minute mark, that's this area over here on the 512 tick chart, 5-minute on the left, 512 on the right, same chart, just zoomed in here on the 512. This was not a valid short. You might say, well, we broke this swing low right here. Well, for a couple reasons, it's not a valid short. The first one, if you kind of come in here and use the swing low like this, we really did not break the 61.8. So, that box hasn't been checked. Yes, we broke this little swing low by a couple of ticks, but if we draw up the retracement short, look at how much higher the 50% is away from the top of the 30. So it's we'll just call it a 43.99, and the 50% is up here at 4,400. So an entire point above. What I like, we barely crept into the first 30-minute range. And what I like is if we go a little bit deeper, so that when we bounce, not only do we break that 61.8 of the long, but the 50% lines up with the underside of the 30-minute high. And anytime we come back into the first 30 minutes after trading above it, we tend to go to the other side of the range. And if you look at later this morning, we had a little attempt here that I'm going to address in a minute, and then the second attempt, I guess you would call this the third attempt. The first one was rejected, the second one was rejected, and the third one we came all the way to lows of the day. So we crossed from the top of the first 30-minute range to the bottom of the first 30-minute range, and then continued kind of a little bit sideways. We're kind of hanging out at the bottom of that range right now. We've got about an hour left in the day. So now we're kind of hanging out down here. So when we bounce off of the top of the first 30-minute range, you can then look for the next long setup. And sometimes this is difficult to do because you're saying, well, we rallied, what was this, 74 up to a 98, so like 24 points. And that might seem like, well, I'm buying at highs. And, looking back on today, yeah, we ended up being close to highs, but look at the follow through you get. A 44.02 long traded up to a 44.07. That's 5 points. Gives you an opportunity to trail your stop multiple times, get a first target, and come away with a trail stop, that has an 04 or a 03.75. So another couple points on the trail stop, and then 3 points on the first target. So, on the days that we end up, so that's a fine trade right there. And on days where we just continue trending, that's where you can end up seeing a 10 or 15 point run on top of what we already saw. Now, one thing I will say, the bigger the first 30 minutes, the bigger that range is, the smaller chance we are to continue strong in that trend. So if this first 30 minutes is 50 points wide, or if we have a 20-point gap and then we go another 20 points in the first 30 minutes, that a lot of move has already occurred, so you have a better chance of the market moving sideways. When the first 30 minutes is a smaller range, it might feel like, wow, we're really consolidating. We're not doing much in the first 30 minutes. But then it becomes really easy for the market to break out of that first 30-minute range and just leave it behind. The other thing to come back at is look at to the left of the chart. Breaking, yes, we moved from this 24-ish point range this morning, but really that was just the low of Friday to roughly the high of Friday. So we were kind of at the point where we could break out of the high of Friday. Now, one of the reasons we got a solid push down from up here is, going back to that daily chart, we came to the halfway back. So on Thursday, there was a really good opportunity to put on some puts right here at the 50%. Still holding those. Another opportunity today, if you extended this 50% down, just to see, okay, where is that 50%? I'm still going to leave the other one up, but what do you know? Today we came a tick within this 44.0775. And if we go back to the 512 tick chart, that's right here. This is that same high. So if we draw up the next retracement in the trend, like this, and we say, okay, well, we didn't quite fail it right here, so you could take a retracement like that, or you come down, wait a little bit for a little bit more sustained break, and if you're interested in getting in the daily trend, you could just come in and put an order at that 50%, but then where are you going to put your stop? If you're entering on the daily 50%, your stop's going to be 20, 30 points away if you're putting it outside of the 61.8. Now, if you're using puts, it's a little bit easier to manage your risk. If you're using, if you're trading the micro futures and you're trying to swing trade those as a way to reduce some of your risk, coming into the 512 tick chart to place your order, so like a 44.03 and a quarter, that at least keeps your risk down. You can use that 2-point stop, keep your stop up here above the 61.8, and then as we roll over, if the market takes a dive, then you're reducing your risk. Now, I prefer to use puts and use options on the daily levels because I find that I don't have to micromanage them as much. And in a situation like this, where you got this little bit of a fake out, and then the market comes up and breaks the 61.8 before rolling over, if the futures can be a little bit messy sometimes, or at least enough noise to take you out of a swing trade. So I find that swing trading the futures is not as advantageous as just going day trade only and just using options for swing trading or the underlying stock. But the idea is you can have a little more wiggle room with stock and options for swing trading. Now, with a position like this, let's say you came in here and said, okay, well, we broke down below. This gray line is the top of the first 30-minute range. And you say, okay, well, I want to short because if I use this swing high to swing low, okay, now that 50% puts us a 99 and a quarter. The actual 30-minute high is about a 99, so we're pretty close. If you short here, now at least you get, about a 4-point move, so you get that first target, you lock in 3 points, and then you're just stopped out in the second half of your position for a -2, so you still come away with, more profit on the trade, or a small winner on the trade. And then unfortunately after that move, there was not a pullback to a 50% when we did get this break right here. And this was getting a little bit closer like to the lunch hour. This was 2.5 hours into the day. So I'm usually wrapped up by about 90 minutes into the day. I'll keep my eye on the markets in case we have a big level like this. Like on Thursday, I wanted to put on some puts if we did come up to that 50%. So I'm just keeping my eye on that level or set an alert, and then I'll come back and look at it. But usually I'm off, I go out ride my bike or hang out with my daughter and stuff like that through the middle of the day, and then just come back and look at things at the close. So that's the way the first 30-minute high and low can be very effective as places to be looking for trades, as opposed to coming into the morning and saying, okay, market's open, go. Let me, trade setup, trade setup, trade setup. Let me look at all these different setups. If you can put a little bit of context and filter a few different locations that you want to be looking for trades, that can help slow things down a little bit, force you to be a little bit more patient, and then, not have as many mistakes or potential mistakes and stop outs because you're focusing on points where the market is likely to get more momentum. And so even like on this long setup today, in and of itself, okay, it's a double bottom, pulled back to the 50%, broke these swing highs up here. The 50% lines up with the top of this of these prior highs. So what was resistance is now support. Beautiful textbook long setup. And then when you pair that with the context of this double bottom was bouncing off the top 30-minute range, you get even more possibility. And then, even if it doesn't become a 10 or 15 point, home run, you still come away with a solid winner on the day, and keeping your eye on the daily time frame and knowing that, okay, well, we do have this 50% short above us at 44.0775. Okay, well, that's up here, so I know that a 44.01 or 44.02 to 44.07 is 5 points. If that's all we go, I'm at least going to come away with a first target and, a couple of more points on the second half of the position. And if we do keep going higher, then I'm already in. And if we were to start ripping through the 50 and the 61.8, now I'm already long. Everyone else is starting to panic out of their shorts, jump in long, and I'm just going long for the ride. And that's when you get those, knockout home runs. So if you have questions, feel free to drop them in the comments below. I'll be happy to answer those. And if you want to kind of see things as they happen in real time or ask questions in real time, every Tuesday I hold a live trading session at the NYSE Open. And you can check that out at EminiMind.com/VIP. Thanks, and have a great week.